Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Today, we're taking a look at Caterpillar Incorporated, ticker symbol CAT. This is a large cap company with a market cap just shy of $150 billion. They are perhaps best known for building heavy construction equipment, bulldozers and such, but they do manufacture other large devices similar to bulldozers for mining and turbines and even locomotives. And here we are on Caterpillar's annual chart, and you'll see that this is a pretty classic short setup. The share price jumped drastically for earnings and looks like it overshot the mark a bit, and it started to pull back. So I believe we can expect to pull back a bit further, but it is at the moment well above all the major moving averages. We roll down to the RSI, you'll see that it is overbought and is falling. The stochastics are overbought and falling. The volume chart shows a huge spike in buying pressure, and now we have gradually diminishing selling pressure taking over. And the MACD shot up, and it looks like it has plateaued, but has not quite begun to register the fall as of yet. So all these things make me think that we are in for a bit more of a share price pullback from CAT. And I will say, for full disclosure, that I did trade some options, some bear call spreads on CAT rather than shorting the shares. And to take a quick look at the fundamentals, we'll switch over to E-Trade here, and you can see that it has very low short interest. The debt to equity ratio is high. It is greater than 84% of its peers in heavy machinery and vehicles. The PE ratio is average for the industry. It is 17.9 at the moment. And that's not an egregious PE, I have to say. It's a little above where you might want to see it, but it's certainly not the worst I've ever seen here. The gross margin is well above average, beating out 72% of its peers. And the operating margin is where it really starts to shine. It beats out 88% of other companies in the industry. Of course, the operating margin is only 16.19%, which is not enormous. It's certainly not something that you might, for instance, see in a tech company. But given the fact that we're talking about heavy machinery, the margins are not quite as large. So 16.19% puts it well above its peers. And the return on equity, likewise, is outstanding at 49.23%. And that beats out 96% of other companies in the heavy machinery industry. As for growth, it is average, and the dividend is 1.8% with a 22% payout ratio. That's actually above average as far as the yield goes, beats out 72% of other companies, but it's not the company that you would likely buy for the dividend. So overall, these fundamentals are solid. Caterpillar's been around a long time. It's a great company. I certainly don't have anything bad to say about it. It just looks like the boost from the earnings call got a little ahead of itself, and it's probably set for a bit of a pullback before we continue this short-term uptrend, which hopefully will turn into a long-term uptrend for the company. But I'd be curious to know your feelings on Caterpillar. Please leave those in the comments below. And if you got something out of the video, I'd appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy this kind of content, please let me know in the comments. Or if you'd like me to take a look at a particular company using these indicators, mention that in the comments, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.